On the Briefing and Play Plus product, we take a multi-strategy approach. Our view is that there's always something working in the market, so our objective is to have multiple strategies running at all times. As an example, with our emerging growth strategy, we were out in front of the network infrastructure, bandwidth, and cloud themes quarters before they began to work their way down to the masses of investors. We consistently find ideas in the IPO market, small and mid-cap growth areas, yield, ETFs, and special situations, such as our reports on attractive rare earth names and Groupon plays. I'll provide a brief overview of some of our strategies. Then the analyst overseeing that particular strategy will go into more detail. Emerging growth stocks is our small and mid-cap growth strategy that identifies companies with rapidly improving fundamentals and strong technicals. These are the top stocks that you see the top performing hedge funds accumulating quarters before the mainstream catches on to the growth story. Special reports is our option strategy. It focuses on giving investors an early read into specific volatility events and market-driven themes. The report provides analysis and options trading strategies around earnings, M&A, and the FDA calendar. In the Stock Ideas report, you will find insider buying analysis, including our quarterly hedge fund review. We consistently find under-the-radar names after reviewing the quarterly holdings filings of hedge funds. This report is also particularly effective at identifying opportunities in declining markets as we discover stocks that are seeing aggressive management buying into steep price declines. Industry Insight incorporates our weekly ETF Chart Book, which focuses on sector rotation and intermarket relationships. You will also find our new Forex strategy in this area. The next big thing is our IPO strategy. We preview and rate the top IPOs coming to market to help you decide whether to seek allocation in the deal or to buy the IPO once it begins trading. We've also found that consistently, some of the market's biggest winners are IPOs that were mistimed or misunderstood. We keep these names in front of you as their stories turn, and most investors have long since forgotten about the stocks. For more on our growth and IPO strategies, I'll turn it over to Jim Bush, our Senior Market Managing Analyst.
Hi, this is Jim Bush, Senior Analyst and Manager at Briefing.com. This afternoon I'll provide a bit more detail on 3 of the features that Damon just introduced, all of which are designed to generate ideas for growth investors as well as swing traders. The first one, Emerging Growth Stocks, is a comprehensive system that uncovers and provides ongoing analysis of early-stage growth companies that we think have the potential to become market leaders. The core of the system is our proprietary quantitative screen, which ranks growth stocks according to a combination of current and forward-looking indicators with a particular emphasis on superior intermediate-term relative strength and various fundamental growth metrics. The screen generates a compact, actionable list of the top 25 growth stocks in the market. But what's unique about our service is that we also provide in-depth fundamental analysis of our components as well, which is something that no other service really provides at a high level, as well as ongoing technical analysis to help you pinpoint attractive entry points. I'll just highlight a few examples to give you an idea of what I'm talking about. On February 8, 2010, Acme Packet was added to our rankings at 1367, well before the name was widely known on the street or among the investing public. Notably, at the time the broad market was in the midst of a sharp month-long correction, which for many investors is the time to concentrate on defense. But our screen picked up on this unknown stock's emerging leadership characteristics, and you all probably know how this story turned out since then. Acme Packet recently hit a high of 62.96, which is a 360% rally from the time it was added to our rankings. Over the course of Acme Packet's rally, we provided in-depth analysis of the company and the stock, keeping our subscribers on top of one of the great growth stories of the current bull market. For a second related example, I also want to highlight for you a group opportunity we spotted for our readers. In July, we had been discussing an emerging theme we were noticing, which was the growing strength in network infrastructure stocks, which later in the fall became known in the general investing publications as the cloud computing theme. Not only did our system flag this emerging leadership group early, but during a sharp pullback in the major averages a few weeks later in early August, we published a report highlighting 6 of our favorite stocks in this group and providing technical levels that would represent attractive entry points. Since then, all 6 went on to post significant gains. Riverbed rallied 152% above our targeted buy zone. Isilon, which was later acquired by EMC, surged 111%, Entropic rallied 104%, F5 rose 85%, Ixia rallied 82%, and Aruba rose 61%. Towards the end of 2010, we started to become a bit nervous about the parabolic moves in these cloud stocks, as well as their extremely rich valuations. To provide our readers with some fresh ideas for the new year, on December 21st, we published a report called Reasonably Valued Growth Stocks for 2011, which provided 11 growth stocks drawn from our emerging growth stocks rankings, as well as our more speculative stocks under 10 list. And all of these were still trading at reasonable valuations. In all, during 2009, 10 of our emerging growth components saw triple-digit gains, most notably Fuki, which more than quadrupled, and Medifast, ArcSight, and China Auto, which all tripled while on our rankings. 2010 was an even better year, with 18 of our components logging triple-digit gains. Remarkably, in 2010, 12 of our emerging growth components were acquired, many for sizable premiums. Of course, not all stocks that appear in our rankings post such outside gains. But the nice thing about our ranking system is that it is set up to quickly cut leaders that begin to lag the market, which ensures that our top 25 list doesn't hold on to former leaders long after they top out. The second feature I'd like to talk about is the next big thing, which provides in-depth fundamental analysis of upcoming IPOs. Specifically, our team focuses on those new issues that have compelling growth characteristics, or alternatively, new issues that seem like solid growth stories but have some serious flaws that investors should be aware of. As part of their analysis, our analysts assign each upcoming IPO an A through F grade, which makes it easy for subscribers to isolate which names to focus their attention on and which ones to ignore. If you have access to new deals, the next big thing can be an invaluable resource in providing unbiased research on upcoming IPOs. If you don't have access, our research reports provide essentially the only quality research you'll find on new issues, particularly because the underwriters on Wall Street typically can't publish their analysis of IPOs until about 40 days after they start trading. Finally, we also provide ongoing fundamental analysis of recent new issues to keep investors on top of those names that are showing continued strength or just beginning to recover from a weak debut. The third feature I'd like to highlight this afternoon is liquid momentum, which is our proprietary focus list specifically designed for swing traders. Unlike the next big thing, which is based purely on fundamental analysis, or emerging growth stocks, which is based on a combination of fundamental and technical analysis, the liquid momentum system is based on pure technical analysis. Specifically, our system isolates and ranks the top 50 trading stocks in the market, which we define as having high intermediate-term relative strength, high ATR values, and high levels of liquidity, among other factors. While having a high-quality focus list to narrow down your trading universe is valuable enough on its own, our technical analysts also post charts highlighting the most compelling swing trading setups several times per week, as well as post intraday spot analysis on those focus list stocks that are on the move. Next, Brett Manning will walk you through the ETF Chart Book.
Hi, I'm Brett Manning, a Senior Analyst and Trader here at Briefing.com. I publish my ETF Chart Book once a week, generally on Mondays. This is a more macro-focused column than most of the things you see on the service. I cover markets around the world and across asset classes from a top-down perspective. Even though it's called the ETF Chart Book, the commentary is actually about markets, not ETFs per se. Though occasionally there's an exception to this, and I focus on more mechanical issues related to ETFs. An example would be something like a discussion on ETFs that hold futures contracts, and how contango in the forward futures curve affects pricing in the ETF, or what the math is behind the fact that the leveraged ETFs tend to move lower when their underlying market is tracking in a sideways consolidation. So there is some of that. But for the most part, this column is about markets, and my sense and bias on those that I follow closely and consistently. This means we look at stocks primarily from an index level, thinking in terms of developed versus emerging markets, and among sectors in various industries. However, I also spend a lot of time on markets other than stocks, as you'll see. In terms of commodities, I'm generally focused on crude oil, natural gas, gold, silver, copper, and sometimes the grain markets, though I don't trade grains myself. I also normally spend some time on currencies with an emphasis on the major dollar crosses, the euro, the yen, the pound, the franc, the Australian dollar, and the Canadian dollar. My approach draws heavily on technicals, mostly pattern analysis, and sentiment data, mostly options data and surveys, though I do generally have certain more fundamental themes in mind. but rarely do I focus on things like valuation analysis on any level. Most of my emphasis is short to intermediate term with a day-to-day to week-to-week thought process, which is basically my trading time frame. This week's chart book offers a good cross-section of the type of analysis you can expect, though it is expanded a little, as you'll see, to give newer readers more perspective on my approach. Finally, note that I also frequently provide updates during the week in live in-play under the ETFXX ticker. For example, today I updated our gold swing short position, noting that my major target had been reached on the decline and that I was closing out most of my remaining exposure for a very nice gain. Now I'll turn it over to Chris Borgmeyer with their special situations.
Hi, this is Chris Borgmeyer. I head up our options coverage here at briefing.com, and I'll be talking about special reports. The special reports was designed to identify stocks and related options that have the potential to make big moves around upcoming volatility catalysts. Our team analyzes the events themselves, as well as the options market activity, in order to identify the most attractive strategies around select catalysts. These reports can be found in the Trading Ideas Fundamental section of the site. Generally speaking, we identify events in two ways. First, we qualitatively scan for events that we view as likely volatility catalysts. These include FDA events, earnings reports, M&A, legal decisions, etc. Then we look at the options market to gauge volatility expectations. Second, we take a quantitative scan of the options market for options trading activity or volatility levels that suggest expectations for elevated future movement. Then we look to identify and analyze the particular event that's being anticipated. The special report page consists of various offerings, including the weekly volatility event tracker, previews and reviews of the most important upcoming events, options analysis ahead of earnings, intermittent ideas around special situations, and our daily unusual options activity comments. I'll talk about the first few of these in a little more detail here. First, the weekly volatility event tracker is published each Thursday, and it consists of 4 major sections. The past week is a review of volatility events in the biotech pharma space that already took place over the past week. In our upcoming event sections, we preview important volatility catalysts along with options trading strategies around these when applicable. Next, the biotech pharma options activity and trade update section analyzes the options market for biotech pharma stocks that are expected to show big moves. And we discuss the related upcoming catalysts here in a little more detail. And finally, we have an extensive calendar of upcoming catalysts in the biotech pharma space that identify important FDA events, drug announcements, or data dates. The second type of offering is the preview and review of specific events. We regularly preview important volatility catalysts in detail, preparing traders for the events and presenting attractive option strategies around those events. In this example, we discussed clinical data, which recently had a drug approval this week that drove the stock up 70%. As you can see, we recommended a call spread as a high-risk reward strategy, or I'm sorry, high-reward relative risk strategy. And the spread worked out particularly well, gaining 150% on the day of the news, and it's now up about 180%, I believe. Finally, our options analysis ahead of earnings is broken down into two parts. Non-earnings season, we do a weekly report that takes a look at options on companies with upcoming earnings. Second, during earnings season, we do daily reports that analyze options activity and volatility into the earnings themselves. These often identify changing sentiments immediately ahead of the event through either heavy call buying or put buying. That sums up the options strategies, and next I'll turn it back to Sean.
So everybody, we're going to take some questions now. We're going to leave everybody on mute and just take questions through the chat functionality. So if you guys have questions, please type them in the chat. I'll send a message so you guys can all see what I'm talking about. It looks like we don't have any questions yet, but if anybody does have a question, please type it in the chat area. We'll take care of it.
question is, what service does someone need to subscribe to get these ideas? All this information is available on the Briefing InPlay Plus platform and above. So I think that most of the people on the call today are on that platform or trialing that platform. How do you recommend starting a portfolio from the emerging growth list?
Hi, this is Jim. The answer to that question really depends on the individual. I mean, it really depends on your holding period, risk parameters, that sort of thing. I mean, generally, first of all, the emerging growth rankings, I mean, we designed them to be mostly suitable for, say, position trades. And what I mean by that is several months. Say anywhere from 1 month to 6 months. Some of them you could have even held for maybe a year. But again, it depends on your tolerance for risk. What we do here internally when evaluating these stocks is, typically you have 25 names on the list, and each week we update the list and we have new names coming on and off. Usually there are about a half a dozen names on that list that just stay on there. They're there each week, week in, week out. Those tend to be the strongest names, both technically and fundamentally. Some recent examples would have been, say, Riverbed, is a good example, or Open Table. Some of the smaller ones would be LaCroix or AXTI, Magic Software. These smaller names, of course, take a little bit more digging. They're much more volatile for people. But generally speaking, what we do is we really try and narrow down these 25 names each week to just the real half dozen strongest fundamental names. We try to, through our spot analysis, keep readers on top of those. In particular, we tend to, talk much less about sort of the borderline names and really focus our attention on the ones that we think are the best. So you'll see them, on the service quite frequently, the ones that we like the best. But that's really the best answer I can give on that. In terms of setting up a portfolio, everyone's holding periods are different. Everyone's tolerance for risk is different. But you can infer by the frequency of commentary that we have on particular names, whether we like it quite a bit or whether, it's just a fast-moving stock.
This is Damon Southward. I want to give you a real-world example of how the list can be used. I'm one of the traders on the Briefing Trader service, and I recently put out a recommendation in LaCroix, LCRY. And one of the things I do is I scan the emerging growth list every week to see if there are any new names appearing that are involved in themes that I know are hot in the market. So if you have a theme that people are aware of that's gaining traction, you always want to find a new name that, in my opinion, it's always useful to look for new names that haven't been discovered by the masses quite yet. And so LaCroix was a company that our analysts have been following. They highlighted the valuation was very cheap at 9 to 10 times earnings, and that on the last conference call, management indicated that the demand for their product was stronger than they'd ever seen in the history of the company, and their high-end products were selling the best. So subsequently, actually this week, the company reported earnings and guided higher, and they also guided results up about a week or two ago. But the company at the time of the last conference call indicated they had really strong visibility for 2 quarters out. So I felt really comfortable recommending that as a long because management essentially assured me that they were going to beat their numbers for the next 2 quarters. And I was able to pull all of that information first from looking at the emerging growth and finding the stock, and then secondly, after reading one of our profiles on the name that provided coverage of the conference call and detail on what the company did. And I viewed it as a kind of a backdoor play into bandwidth infrastructure expansion. Okay.
So the question is about some subscribers are platinum subscribers and they're taking a trial of Briefing in Play Plus. Check your email for the information on the new terms for Briefing in Play Plus. That will all be laid out in an email for you. If you still have further questions, our customer service group can answer those for you. Just send them an email at service@briefing.com.
Anyone there follow the oil market? I own some ERX. What do you think of that?
ERX, I actually think it's the equities. This is Brett Manning. I run the ETF Chart Book. So ERX, I believe, is leveraged long in the energy equities. I follow equities in general, sometimes from the sector level, but mostly from the index level, and follow crude oil itself. So if you'll take a look at the ETF Chart Book, you can see in the archive my track record with crude oil, and that I focused on it quite a bit. But the energy equities as a sector, not quite as much.
When you use the term distribution, is that basically a euphemism for downward movement in a stock price due to selling?
It's not a euphemism. It's a fairly specific term. Really, when you hear us refer to distribution, we're talking about a combination in price and volume. You know, generally a big down day accompanied by much higher than average volume. So it's usually pretty easy to spot on the chart. I mean, when you see, say, something on the order of 5% down or more, and then a big spike in volume on that, it's usually easier to see on a weekly chart. That's what we're talking about with distribution. It's one of those red flags that we watch for.
Question, can we submit stocks for review, i.e. IBIO, or NOV? You know, we do have a special situations component to the Briefing in Play Plus platform. So we're always looking for new names that may be involved in a strong trend. So, for example, recently we wrote up, there was a lot of buzz about Google making a bid for Groupon. So we went out and looked for the most compelling publicly traded Groupon plays and highlighted a couple that we really liked and mentioned some that we didn't like that we would stay away from. We've done the same with rare earth as well. We did a special situations report on the rare earth space and highlighted all of the names in the space and told you, what their exposure was, how close they were to production, what their cash situation was, burn rate, and just the true fundamentals of the story. Do you see that your cause actually moved the market? It seemed like that to me when I used to subscribe to Briefing Trader. I would say they can move the market depending on the stock. I mean, I know with the emerging growth list in particular, people are always anxious to see that report get published and start buying almost as soon as the report hits the site.
And this is Jim. One thing I'll add to that too is, especially with emerging growth stocks, and sometimes on the next big thing, with the smaller names, sometimes Briefing is the only place you can find research on these. So sometimes we'll move them because we're basically the only one who covers them, and we put out a report or a comment on them. That's considered to be new information in the market, generally with the smaller names.
So I think that's the last question that we have in the chat area. So if you guys do have any more questions, send them in the next couple of seconds here. Otherwise, we're going to call the webinar a day. Thanks for joining us, but I will sit around here for a minute and just wait for another question or two to come in if you do have it.
I've heard of the term buying protection. What are they talking about?
Hi, this is Chris. I'm assuming they're talking about buying puts. Puts are seen as insurance contracts on a stock, essentially. So into big events or volatility catalysts, even earnings or especially these FDA events, a lot of times someone might have an existing position that they like for the long term, but might be worried about the near-term volatility or some near-term, want to cap their downside. So by buying protection, I'm guessing they're talking about buying puts, buying put options around that event, which with special reports, we'll address these things, but we often look for better strategies for those that do own the stock rather than just simply buying a put, because volatility gets inflated into these events, and if you buy a put, it's like buying hurricane insurance as the hurricane's approaching, so you're going to overpay for the insurance. With special reports, we look to identify a better strategy than an outright put purchase, so we might look at a put spread that at least protects you from the volatility crush, right? The decline in volatility as the volatility catalyst is removed from the horizon. That's inevitably going to happen once it passes. So it's buying protection is a very smart thing to do around volatility catalysts, but there's sometimes better ways to do it than an outright put purchase.
The next question is, can this webinar be played back? I have some friends who'd like to check it out. And yes, it will be available for streaming. We have a site. There's a site called Fiddler.com where we upload all our videos to and audio webinars. I put the link in the chat area. You guys feel free to check out what's in there already. But this webinar will probably be up there in the next day or so. And so I don't see any further questions. Today we're going to wrap up the webinar. I want to thank everybody for joining us. If you're on the trial of Briefing and Play Plus, again, check your email for the details that you need in order to continue that service if you choose to do so. Once again, thanks from the whole team here, and have a great day.